Hello, my name is Steve Bigelow with the Candlestick Forum. The markets have gone back into an indecisive trading stage. Today, the Dow traded positive, continuing the morning star signal with the inverted hammer up through the T line, hit the 50, but backed off, started selling off near the close. Still tells us we're in an uptrend, but not as decisive as if it had closed a lot stronger. Additionally, notice what the NASDAQ did today. It gapped down near the low or the open of Friday and traded lower most of the day. That's not a good sign. If the bulls are in control, they wouldn't be gapping down that much, again, to the previous day's open. This kind of puts some doubt in the overall market trend that maybe this downward resistance level is still acting as resistance. And here's something that you can gain from using candlestick analysis versus the logic of Wall Street. Today, the oil sector was upgraded. We had recommended LPI way down here when it did a best friend signal off the 200-day moving average and up through the T line. So this always puts into question, what type of intellect are these analysts using to be upgrading sectors where in this case it's already gone up pretty close to 100%, over 100%, and now they're recommending it. Same scenario here on our recommendation of VET. There's our best friend J-hook gap up starting wave 3. If somebody was an astute analyst, why weren't they recommending going long on oil stocks down here versus up here? Anyways, this is just to kind of give a clear illustration that the candlestick charts tell you when the buyers are stepping in, not necessarily when stocks are being recommended. So again, that was our analysis the other day with a 2+2 analysis, where a best friend signal was creating a J-hook pattern. Also, the transportation index was showing a lot of strength. Once again, look at our best friend signal on Sting. And then they gapped it up today through the 200, pretty much telling us wave 1, wave 2, wave 3 is in progress. So we can use the signals to our advantage, like the message in Murin. Message is where they open it higher and trade it lower, doesn't look good. But what was the message? The message was that they were trying to get into this stock with great enthusiasm. So what is the logical analysis using candlesticks? We watch to see what signals are telling us that the selling is over and the uptrend is started. So if we know there's a high probability uptrend, like we did in our recommendation of TVTX, when the selling stops, the message was they were trying to get into this position with great enthusiasm, and that's usually the result of that message signal. So if we have that information and we expect a steady uptrend, we were recommending in our options trading room to buy the October 10 and selling the 12.5 call spread for 75 cents, because if it goes to this level, this should be $2.50. Your 75 cents basically is more than tripled, and all it has to do is move to this level. If you bought the calls outright to make that same rate of return, they would have had to have gone up to this level. So this is why we're going to be given a free training on October 2nd, this Saturday. It's usually a 1-hour training. They usually stretch into 2 hours, but it shows you the logical investment strategies or option strategies to use with appropriate signals and patterns. So not only is this market providing some good upside, but there's still some very good sell signals in progress. The bearish left-right combo on our recommendation to go short on EXAS, and look where it occurred. A strong bearish signal right smack dab on the 50, continuing to move this price lower. So right now, because of the apparently the passing of this big spending bill, still some doubt in this market. The Dow backed off, failing at the 50 today. Didn't say it was reversed. It was just saying that there was some weakness. And the same weakness shown over in the NASDAQ says, keep short positions in your portfolio, but stay predominantly long. That'll be it. We'll see you in the chat rooms.